Welcome to our deep dive into Mahindra and Mahindra Ltd, a cornerstone of the Indian industrial landscape. As we look toward 2026, M&M stands at a pivotal junction of traditional dominance and futuristic innovation. This conglomerate has successfully pivoted from a tractor-heavy manufacturer to a powerhouse in the SUV and electric vehicle segments. For institutional investors and strategic decision-makers, understanding M&M isn't just about looking at vehicle sales. It's about analyzing a massive ecosystem that spans across 100 countries. Today, we will break down the core growth pillars, from their unrivaled leadership in the farm equipment sector to their aggressive born electric roadmap that are set to redefine their valuation by the middle of this decade. Management has outlined a clear path for the next 3 years, focusing on capital allocation and efficiency. M&M's 2026 vision is built on achieving a consistent 15–20% revenue CAGR while maintaining a disciplined approach to capital. Their primary objective is to sustain an 18% return on equity, ROE, a metric that underscores their commitment to shareholder value. By streamlining their portfolio and exiting low-performing international subsidiaries, they have unlocked significant capital to reinvest in high-growth areas like the born electric SUV platform and global farm machinery. This financial discipline is the bedrock of their 2026 investment thesis. In the passenger vehicle market, M&M is no longer just a participant. It is a leader in the premium SUV segment. With a massive order backlog exceeding 200,000 units, the demand for brands like the XUV 700, Scorpio N, and Thar remains unprecedented. By 2026, M&M aims to capture and hold a 20% market share in the Indian SUV space. Their strategy involves launching a series of mid-cycle refreshes and new internal combustion engine models to bridge the gap until their EV portfolio fully matures. This segment continues to be the primary driver of their operating margins due to the high average selling price of these flagship models. Mahindra remains the world's largest tractor manufacturer by volume. In India, they command a dominant 41.6% market share as of recent fiscal data. However, the 2026 outlook focuses on global expansion 2.0. M&M is aggressively targeting markets in the USA, Brazil, and Turkey to diversify its revenue streams away from the cyclical nature of the Indian monsoon. Furthermore, their push into ag tech, providing digital farming solutions and precision farming tools, is expected to transform them from a hardware provider into a comprehensive agricultural solutions partner, creating high-margin recurring revenue opportunities. The most significant catalyst for M&M's stock valuation through 2026 is their born electric BE strategy. Unlike competitors who are converting ICE frames to EV, M&M is building dedicated electric platforms. They have committed to launching 5 new EV models by 2026, targeting an EV penetration of 23% to 30% within their own portfolio. With strategic investments from the British International Investment and Temasek, M&M's EV unit is already valued at approximately $9 billion. This roadmap is designed to position M&M as a formidable competitor to global EV giants entering the Indian market. Financial health is where M&M separates itself from pure-play EV startups. By 2026, the company is targeting sustained EBITDA margins in the range of 12% to 14%. Their robust cash flow from the tractor and ICE SUV businesses provides the dry powder needed to fund their 10,000 crore rupee annual investment plan without over-leveraging the balance sheet. This self-funding model for growth is a key attraction for conservative institutional investors who seek growth without the typical risks associated with high-debt technology transitions. We expect to see a significant improvement in free cash flow as their new manufacturing plants reach optimal capacity utilization. No investment outlook is complete without a realistic assessment of risks. As we head toward 2026, M&M faces 3 primary challenges: raw material price volatility, specifically for battery components, rising interest rates, which could dampen consumer demand for vehicles, and intense competition from both domestic players and global entrants in the EV space. Additionally, their farm sector remains sensitive to climate change and monsoon patterns in India. Investors should monitor how M&M manages its supply chain resilience and whether they can maintain pricing power in an increasingly crowded SUV market. Mitigating these risks will be crucial for M&M to hit its 2026 targets. In summary, Mahindra & Mahindra is a unique blend of a value stock and a growth stock. With their dominant position in tractors and SUVs providing a safety net, their born electric transition provides the high-growth alpha that modern portfolios seek. By 2026, M&M is poised to be a much leaner, more technologically advanced version of its current self. If they successfully execute their 5-model EV launch and maintain their 18